Housing affordability is still a key stressor on many Canadians this year. An RBC report released recently in December stated that while the factors around affording a home have improved slightly, it is still a major struggle for the average potential buyer. For more insight, we're joined now by Robert Hogue, Assistant Chief Economist at RBC. Hi, Robert. Thanks for being with us.
Well, good afternoon.
Now, I understand that affordability has been getting better, but you're saying it's still at near worst ever levels. How would you characterize that?
Yeah, I mean, we're just starting to reverse the sharp deterioration in affordability that we went through over the pandemic, when in some markets now prices had gone up more than 50% in the space of 2 years, and now not necessarily that home prices are coming down. The fact that interest rates have come down to a certain extent is providing some breathing room, but only partly kind of rolling back the deterioration, the prior deterioration. So we, at the same time, we have some relief taking place, but it's still weighing, affordability is still weighing on a lot of potential home buyers that are out there.
Where do you think the Bank of Canada winds up this year with its key rate? Many people think it could get as low as 2. And second part of that question would be, are you surprised that there hasn't been more activity in the housing market based on the rates cuts that have already been done?
Right. Well, we are amongst those who are expecting the Bank of Canada to go all the way down to 2% by the middle of this year. Now, you have to keep in mind that what the influence of interest rates on the housing market is not just on the overnight rate, the policy rate, but it's largely taking place through the longer-term interest rates, so bond yields, for example, and those had declined earlier and before the Bank of Canada started to cut rates. But over the last few months, they have not come down that much. And in fact, it might have gone up a little bit. So mortgage rate, like fixed mortgage rates lately have been fairly static. And even December, we saw a little bit of an uptick there. So it takes a while for potential home buyers to react to lower rates. And we saw that in the fall. So the first rate cut by the Bank of Canada did not immediately result in stronger activity, but by the fall we saw that things were picking up pretty much across the country. Now the early results for December show that there's going to be very mixed pictures. It looks like some markets like Toronto, things have slowed down again, at least for that month, whereas in other markets like Montreal, things the activity, home resale activity, continued to be fairly strong. So really, to keep the market going, though, we need to see further rate cuts and those translating into lower fixed mortgage rates to get the market going a little bit more. And on that front, we think that there is some expectation that they will indeed continue to stimulate demand. However, it's going to be gradual. We don't expect a spike in home buyer demand. At the same time, we don't expect the market to crater either. So it's kind of a slow a continuation of the recovery that we've seen over the fall, but a very gradual one, both in terms of activity, but also in terms of prices in some markets.
Robert, the new mortgage rules in Canada kicked in just less than a month ago. As you know, how much impact will those have, such as being able to amortize a home over 30 years, a mortgage over 30 years as opposed to 25?
Right. It's actually changes to mortgage insurance rules as opposed to mortgage rules per se. At the margin, they will help, probably not in every market. But for first-time home buyers, I think it has the potential to lower the monthly payments, at least the first few cohorts that will take advantage of that. And if that is a measure that is very successful, the downside is that it will probably boost prices a little bit more than would otherwise have been the case, so which could potentially negate the initial improvement in those lower, let's call them affordability, but it really is more about lower monthly mortgage payments. So at the end of the day, my expectation is that the impact will vary greatly across the country. Some of the markets where prices are a bit more affordable might see a bit more uptake from that, whereas very highly priced markets like Toronto and Vancouver, I think there is maybe some potential, but much more limited, I would think.
Right. Okay, we'll leave it